Hi everyone, so welcome to the live stream today. Really excited for having you for a new week as we continue with our discussion for the examination. Today we are getting excited to look at some questions relating to the skill level paper financial reporting in the Institute of Chartered Accountants Nigeria, so ICAN financial reporting skill level, and we're going to be focusing on the preparation of the cash flow statement using the direct method. Now, if you remember in IAS 7, which is the cash flow statement, normally what you are familiar with is the preparation of the cash flow statement using the indirect method, where the cash flow from operating activities, you are looking at the issues in respect of the profit for the year, you make adjustment, the profit before interest and tax for the year, or the profit before tax for the year, then you make adjustment for the non-cash items, then you bring in your working capital movement and those things, and then boom, you can have the tax paid, the interest expenses paid for the year for the operating activities. So that is the indirect approach. Now, in the direct approach, this is where you are going to the other route, where you are going to be bringing in some issues in respect of the cash you have received from your customers, the payment you made to your suppliers, then a couple of other issues like payments for your operating expenses, finance cost will still come, and then taxation will come. So we want to look at IAS 7, preparation of the cash flow statement, looking at that direct method on how we prepare the cash flow statement. I see some of you guys joining. You are welcome. If there are any questions you have, you can leave them in the comment section or the chat box for me. Remember to also share the video. Let's reach as many students as possible. So share the video in your WhatsApp groups, Telegram groups, and all of the pages that you are on. Let's get many students coming, joining the stream to help students preparing for the ICAG financial reporting, ICAN skill level financial reporting, ACCA financial reporting. All of these, we are going to be getting something that will be valuable for us as we get into the examination. Remember that you can also enroll in our practice question courses. So we have practice question courses covering everything that you need to understand when it comes to financial reporting, corporate reporting. Then we have also for management accounting available. So you can enroll in these exclusive courses where you get access to questions with solution solved like this in a video format. You can watch them in the Nhyira Premium mobile application or on the website with your mobile phone or laptop or whatever device you are using, so you can prepare well for your examination. So you can head on to our website, nhyirapremium.com, and enroll in the practice question courses, or hit us a message on WhatsApp and you will be assisted to complete your enrollment. Remember, it is important to understand the principles underlining each of the topics, each of the subjects, but it's also crucial for you to expose yourself to questions from various perspectives, various schools of thought to put you in that position so you can go into the exam hall, write the exam with confidence, and most importantly, pass the examination. So welcome to the stream. Let's go into the discussion and let's see what we can do for the day. So there we go with my slide up. Boom, let's go. So we are looking at the Institute of Chartered Accountants of Nigeria, that is ICAN, skill level examination, and we are looking at financial reporting. And we are looking at the past question for May 2024. It is an interesting question. We are looking at section A, question 1. And the requirement of that question for 20 marks says, prepare statement of cash flow of Badari PLC for the year ended 31st March 2021 using direct method in accordance with IAS 7. So this is preparing the cash flow statement, but using the direct method. Now, in the direct method of preparation of the cash flow statement, the only thing that is coming up is that, as I mentioned earlier, you are going to be bringing up issues such as the cash you've received from your customers, the cash you've paid to your suppliers, cash you've paid to employees, other operating expenses that you've paid, and that will give you the cash generated from operations. After that, you can bring in the interest that you have paid, and also bring in the tax that you have paid. So in the direct method for the preparation of the cash flow statement, this is how we're going to be dancing. And the reason why this method of cash flow preparation is important and you must know about it is that it takes you back to accounting 101, preparation of the control accounts, and how you can derive the figures of the money that was paid to customers, the money that was received from customers, the money that we paid to our suppliers, and also the operating expenses that have been incurred by the entity for the year ended under review. So this is taking us back home to accounting 101 for us to get some fundamental understanding when it comes to dealing with the cash flow statement. And that is why it is important for you to understand this well as we put ourselves in that position to go into the examination. So let's see how we go into this. So let me set up my workflow. As you know already, our company is Badari PLC. So Badari PLC. The requirement of the question is for us to prepare the statement of cash flow for the year ended 31st March 2021. So statement of cash flow. Statement of cash flow for the year ended 31st March 2021. There we go. We are in Nigeria, so we got to put some respect on the Naira here. So Naira, we are working in 2 cash columns, 3 zeros up. As always, we're going to start from cash flow from operating activities. So cash flow from operating activities. Unlike the indirect method where, so here we are using direct method. Unlike the indirect method where you're going to start with your profit before tax. So if we go back up, you see the statement of profit or loss for the year. We would have said, oh, let's start with a profit before tax figure under the direct method. But that's not what we're going to do here. This is the indirect method, so the flow is going to be different. Right. But we know in the operating activities, the things that we are going to be trying to bring, let's see if I can bring the pro forma back up, is to bring the cash we have received from our customers, how much we paid our suppliers, how much we spend on operating expenses. So the direct method is taking us back to the usual thing, not in the profit statement or P&L account, and make certain adjustments to the account. So let's go read a story and break everything down. Badari PLC, statement of financial position as of 31st March, Okay, so we've seen that coming up. Now, I want you to pay attention carefully because in the statement of financial position, we have 2020, 2021. So we are moving from the right to the left in the flow. Yeah, we see property, plant, and equipment going up in value. We don't know. We're going to break it down later. Investment also going up in value. We don't know. We're going to break that up later. Inventories. Okay, remember here, you're not going to do anything like working capital because we are in the direct method. So there is a different way we're going to use the inventory figures. There's a different way we're going to use the trade receivable figures. Bank, we know what we're going to come up with later. That is going to be cash and cash equivalent. We're going to bring that up later. Ordinary shares, we are seeing 80 kobo for the ordinary shares for the period under review. 80 kobo. Now, you have to understand of the records. So let me set up my workings flow here if I want to. So workings. You know, the idea is that 100 kobo equals 1 naira. Okay, that's the idea so that we can be on the same page. So 80 kobo is going to be 0.8 so that you understand what we are going to get ourselves into in a moment. So 80 kobo 0.8. We're going to come back to that. Then we are seeing 10% redeemable loan. It's going up in value. Maybe they have issued some shares, some loan notes. We'll come back to that. Share capital, ordinary shares is going up, so probably they issued some shares. We'll come back to that. You'll see how all these pieces add together. Then we see their financial statement for the year, P&L account, sales, and all of those things. Then there is another figure here, dividend received. We're going to come back to that. So these are just the financial statement trying to just do a walkthrough so we have an understanding of what is happening. Now let's get goosebumps into the main discussion. Additional information. During the year ended 31st March 2021, plant and equipment with a carrying amount of this was sold for this. Now remember, you are working 3 zeros up. So anything in the footnote, you're going to cancel 3 zeros out. That's very important, right? So the carrying amount is 40, but we were sold for 55. Then he says, the profit or loss on disposal was charged to distribution cost. So few things very clearly before we get excited. As I say always, if you can work by leaving reasonable spaces, then work for it. Because there are certain items that must come under the investing activities as you read. So you don't have to wait to finish all the operating activities before you come to investing activities. So you move in that order. It all depends on the way you want to dance. I want to dance in the manner where I could leave some space and then bring in my operating activities. Okay? So cash flow from investing activities. And you know, this area talks about the acquisition and disposal of assets. So the note 1 we just read, stay with me carefully. It says, was sold for 55,000. So that will be proceeds from disposal. That will be under investing activities. From disposal of PPE, and that is 55,000 because we are working 3 zeros up. That's an inflow for us coming in there. Next, that workings, this figure, the carrying amount of PPE tells me that I can start to get goosebumps on my first workings, and that is property, plant, and equipment. I'm going to do a mixture of T account and vertical presentation here, okay? So that both the Gen Zs and the OGs will all be on the same page. So let's go pick up the PPE situation. Opening figure will be 110,000. Closing figure will be 350. So balance brought forward, 110,000. We pretend to close. Balance carry down, 330,000. Did I get that right? No, 350,000 rather, Nhyira. There we go. Then the asset that was disposed, we bring it on the credit side. So the carrying amount of the assets that was sold, 40,000, will come on the credit side. Okay? We are not done. So the proceeds from the disposal goes to investing activities. The carrying amount on the asset goes to the credit side of our PPE or is deducted from PPE. And then the gain or loss on that must be adjusted for in the operating activities. But this time we are in the direct approach, not the indirect approach. So yes, we need a profit or loss from the disposal. Then we must adjust for it later. And I'll bring that up, workings too. What are we going to get? We got 55, but the carrying amount was 40. So that will be gain. So profit on disposal will be 55,000 Naira minus 40,000. So we made a gain of 15,000 Naira. We will adjust for this later on under the operating activities. So just stay with me when we are dealing with cash paid to or cash paid for operating expenses. So we'll come back to this in a moment. So that is footnote 1. We are done. Very sweet, simple, straight to the point. In the indirect method, we would have taken this 50,000 and would have gone to adjust the items, but we are not there. That's a different approach. Note 2. Dividend of 2 kobo per share was paid in the year ended 31st March 2021. Okay. So dividend of 2 kobo per share. So note 3. Dividend. The question is, how many shares do we have? If you remember earlier, we were told 80 kobo. When did they pay the dividend? Let's see. The dividend was paid on 31st March 2021, which is at the year ended, the day on which the financial statement is being prepared. So it means the number of shares in issue was 220 divided by 0.8. So let's get the number of ordinary shares. So 220,000 divided by 0.8, because the nominal value per share is 80 kobo. And that's 275,000 shares. So if that is the case, then our dividend will be 275,000. How much did they pay? They paid a dividend of 2 kobo. That will be $0.02 Naira. Okay? So that we can get the amount of dividend that was paid. So my answer times 0.02 will give me 5,500 Naira. Now we know dividend paid can come under operating activities. It could also come or go under financing activities. So we're going to be bringing that up later under financing activities as we build the story up there. Then they did a bonus issue. They did a bonus issue. So you have to understand what were the bonus issue, and there were also bonus issue. So if you go back up to the context of the question, you will realize that, bonus issue are always made from, or is always made from reserves from the previous year. So let's do the calculation for the ordinary shares and find out what is happening there for that. So workings 4. Now, looking at the fact that their preference shares went up, it means they issued some shares and they did bonus issues as well, and we have to understand that. So it means they didn't do the bonus issue from the share premium. They might have done the bonus issue from the retained earnings. So we're going to use the retained earnings to find out, because dividend has been given to us, any balancing figure from the retained earnings will be classified as the bonus issue. So stay with me carefully here. So, I was about writing Ghana cedi, but we are in Naira. So retained earnings. Last year, 119,000. So balance brought forward, 119,000. Pretend to close. Balance carried down, 280,000. Right? Then we go to the P&L for the year. What was the profit for the year? Profit for the year is 216,500. That will be credited to the retained earnings account. That's going to be 216,500. So if you remember, normally we would have prepared this account so we can calculate the dividend that has been paid. But in this question, we have been told the amount of dividend, which we just calculated to be 5,500. So that will come on the debit side because dividend is paid from retained earnings. So dividend paid coming from workings 3, 5,500. So we're going to balance this account. And it looks like the credit side is more than the debit side, which means the balancing figure becomes the bonus issue because it means they did the bonus issue from the retained earnings. So let's balance it and see. 119,000 plus 216,500, and that is 335,500, 335,500. So the balancing figure will be termed as bonus issue. Sounds good? And that will be minus into bracket 5,500, 280,000. And that is 50,000 Naira. So look at the styling of this question. Normally, your retained earnings will be for you to calculate dividend paid. But we've been given the dividend paid, we've been given the opportunity to be able to calculate the dividend payment. And so now any balancing figure from the retained earnings will be the bonus issue because the examiner said, or the question said, and they also made a bonus issue. Very important. Context of the question and the way we dance. So now that we've seen the bonus issue, let's go to note 5 so that we can get the issue of shares, if any. So issue of shares. I'm going to do maybe vertical presentation here in that case. So if you check the ordinary shares and the share premium, I'm going to add the two together, okay, and work it out simply. So balance brought forward will come, and that will be 120,000 for the ordinary shares. Issue of shares, not issue of sales, Nhyira, plus the share premium 30,000. Okay, and that is giving us an amount, will give us an amount of 150,000. That's the opening figure. Then you're going to pretend to close it, balance brought down. The current figures 220 plus 60,000, making 280,000. But remember, there is a bonus issue that was made, so it will be added because the double entry for the bonus issue was to debit retained earnings, credit share capital. So you add the bonus issue from workings 4, the 50,000, so that in that case, our balancing figure will become the issue of shares. Okay, proceeds from the issue of shares. So that will be 200,000 here. So that the balancing figure will become 80,000. And that will be proceeds from the issue of shares. Sounds good? So this is an interesting question, right? And this will be also investing activities. So far, I have two items that are going into the investing activities. The dividend that was paid from workings 3, and then the issue of shares from workings 5. So that is the way we treat it as well. Again, you pay attention to the context of the question and the way I'm moving. I read the footnote, and then I need to conclude what are the implications of the footnotes. Then you apply the principle, because that is how you manage the time. That is how you go with speed and accuracy, right? To position you to pass the examination ultimately. And that is very important for you to understand. So let's continue with the discussion still on this. Now I see some people joining. You are welcome. We are solving a question from the Institute of Chartered Accountants of Nigeria, skill level financial reporting, May 2024. It's a cash flow statement question, but the issue here is that it is for the direct method. Not the indirect method, by the direct method. And that is what we are on. I see some of you joining. You are welcome. Give us a thumbs up if you are getting some value from the video. And make sure you share as well. Let's reach as many students as possible so we can help many people studying for the examination. So that's note 2. And I'm done with all the workings from note 2. So the note 2 had an implication of calculating the dividend, getting the bonus issue, and getting the shares that we have issued. So let's continue with the discussion. Note 3, that is I. Note 3. Note 3 says, depreciation charged for the year was 10,000. Remember, we are canceling 3 zeros here because we are working 3 zeros up. On furniture and plant and equipment, and 30,000, so 10,000 on furniture and 30,000 on plant and equipment. So total depreciation charge is 40,000. So again, we go to our PPE account, we will credit it with depreciation for the year. So depreciation comes here for us. And that is going to be 10 plus 30, making 40. So 10,000 plus 30,000, making 40,000. On the credit side. Now be careful because we wouldn't bring this to operating expenses to cash flow from operating activities directly. We don't know, but all other things being equal, depreciation on furniture, plant and equipment will definitely be affected in the admin and distribution expenses, and we'll come back to that as well as we proceed in the discussion. During the year, an investment which cost this some years ago was disposed of for this. Okay, so proceeds from the disposal of that investment will come under investing activity. So proceeds from disposal of investment. We are interested in that first. How much we got? Was disposed of for 20,000. 20 million naira, but we are working 3 zeros up, so 20,000. Okay. Then we go in there and look at the profit or loss on disposal was charged to admin expense. There's a lot of things going into admin expense, so let's get a profit or loss on disposal. So note, what, 6? Profit or loss on, would it be profits or loss? Let's see. Carrying amount was 12.5 million. We sold it for 20 million. So it's profit. Okay. So profit from disposal of investment. From disposal of investment will be 20,000 minus 12,500, and that's going to be 7,500 for us. Again, we'll come back to that in a moment as we proceed. It's included in admin expenses. I'll come back to all that, don't worry. The dividend received were from investment in shares and immediate disposal of rights from the investment in shares in a blue chip company. Okay. So you see here, dividend received is in the P&L, 153,500. It's under, we will take that to invest in activities. So dividend received, 153,500. So we are done with the footnote, but we are not done. Okay? Because if we go back, we can then put the pieces together here. Now, let's see what's happening to the investment, because we started the journey with 30,000. We now have 60,000, and we sold 12,005. So let's go work something out for that as well. So maybe working 7, investment. Nhyira 3 zeros up, Nhyira 3 zeros up. Let's see. Go back up. Investment. Last year, 30,000. So balance brought forward 30,000. Balance carry down 60,000. Okay. But we sold. What we just sold, they said, note Ivy. We were told that the investment cost 12,500. So we credit that. Disposal. 12,500. So that the difference will become what? The credit side is more than the debit side. So the difference will become additional investment that was made during the year. So 72,500. 72,500. So we bring that up. 72,500 minus 30,000. That'll be 42,500. So we will say maybe acquisitions during the year, 42,500. And so that will come under investing activities. So acquisition of maybe investment. That's from workings A 7. 42,500. And that is a cash outflow. Okay? That's a cash outflow for us. Let's continue in respect of that. So we've done investment. Can we clean up PPE? Yeah, I think we are done with PPE. So let's clean up PPE as well. 350 plus 80, making 430. So if you check, it looks like we bought some PPEs as well. So balancing figure, purchases of PPE during the year, minus 110, and that is 320. And that will go under investing activities. So workings 1, purchases of PPE, property, plant, and equipment. Workings 1, 320,000. That's an outflow. All right? So that's the flow. Okay. What else can we clean up? It looks like I'm done cleaning up. Okay. But you see, in the operating activity, we finished reading the notes, but nothing has come under operating activities. Why? Because we have to work out everything ourselves. We have not been told how much we paid our suppliers. We've not been told how much money was received from our customers. So we got to figure it out ourselves. So this is where we are on our own, so we fish it out ourselves. So what do we do first? If we need the money we've received from our customers, what do? We prepare the debtors control account. So we use a trade receivable to prepare the trade receivables control account, then we're going to assume that all the sales that occurred during the year was on credit. Then we can get a difference to get a cash received from them. So we go back to our workings. That will be workings 8. So we prepare the trade receivables. Again, just the account here. Receivables has a debit balance, so let's go up. Last year 60, now it is 90. So balance brought forward 60,000. Now it's 90,000. The sales during the year will come in the P&L 490,000. So sales during the year, because the double entry is to credit sales and debit receivables, 490,000. All right? Yep, that's it. We done? So the balancing figure should give us the money we got from our customers. So 490 minus 60. No, 490 plus 60. Okay. So that would be 550,000. 550,000 minus 90 will be 460,000. So the balancing figure is the cash we received from customers. Do you get the idea? And that is what will go into, from workings 8, our first line item in the operating activities. So cash from, or maybe let's use the right word, cash received from customers. Workings 8, 460. Okay, 460. Stay with me. Now we need cash paid to our suppliers. And you know we got to work for that, so workings 9. Now, how do we get a cash payment to suppliers? We can use the creditors figure right? And prepare the trade payables control account. And we need the purchases for the year as well, which you don't have. All you have here is cost of sales. But we have opening and closing stock. So if you have opening and closing stock, you can get your purchases figure. So you see why I said this thing is giving us accounting 101 vibe. Because you learned in KG2 that opening stock, okay, then you add purchases, you less closing stock, and that gives you cost of sales. You know this in KG2 or from KG2. So if I want the purchases figure and I have opening, closing, and cost of sales, what do? Turn the formula upside down. So it will become cost of sales coming first. Then you can add the closing stock to it. Then you can less the opening stock. And then voila, there your purchases figure is. You get a concept. So that is the concept we are going to be using to get our purchases for the year. Then we can now fuse that into the trade payables control account. Then we'll get a cash we pay to our suppliers. Very beautiful, right? Beautiful. So we bring in the cost of sales. So for the year, our cost of sales is 222,000. Okay, Nhyira, be careful on the zeros. 222,000, 222,000 naira. Then we move in and bring in closing stock. So the closing stock will be the inventory at the end of the year, which is 295,000 here. Then you can less the opening stock, which is the last year's figure, which is what? 120,000. Take it out. And that is going to give us the purchases for the year. So purchases for the year. What we got? 222, 123, plus 295, 123, minus 120,000. I get 397,000. But that's not what you are interested in. Now let's prepare the trade payables control account. So trade payables. Be like this. Bring in the opening figure, which will be last year's figure. How much we got? 14,000. We close the account. Balance carry down. 65,000. Then the purchases during the year will come on the credit side. So purchases from above, 397,000 here for us. So the credit side is more than the debit side, and so the balancing figure will become the cash we paid our suppliers. See how simple that is? So plus 14,000, 410,000, 410,000, minus 65,000, and that is 346,000. That is the figure we are looking for to bring here. 346,000. This thing is supposed to be 460,000, not 460. $346,000 outflow. Accounting 101. Accounting 101. So that is the cash paid to suppliers. But you're not done. We need to look at the cash we paid for operating expenses as well. So cash paid for other operating expenses. And we have to work for that in Workings 10. So that'll be on the next page, Workings 10. And I'm seeing some charts coming up. Let's see if I can take some of the messages quickly. Yep, quickly. Milton said, I'm following from Liberia, West Africa. Thanks always mentor. Okay, Milton, it's a pleasure. Thanks for joining us. Esther Ubi said, watching from Nigeria. Well done. You're doing a good job. Okay. Thanks for joining us. Samuel Ada. Okay, probably with some emoji there. Okay. Nhyira, I used to think that I have to pay before I can get your live videos. Yes, we have our paid live videos available. We have our main lectures available. These are free lectures which are available on YouTube that we host every now and then. But we have a regular class available which we offer lectures, and you can enroll in the course to get access to all of the content. We have practice questions videos also available, or courses available. So you can enroll in our financial reporting or corporate reporting practice question course. And that gives you access to join our executive leadership masterclass, which is coming out from the 20th of November. Sorry, 20th of October. And then you get access to questions solved like this from various perspectives on the standards, single entity, ratio analysis with the guiding principles that you can get access to in that case. And that's it about that. So our YouTube, that is free, you can get access to that. But our exclusive mentorship session, that one is premium, and that is for paid students, and you can get access to that by enrolling in our courses. Then another comment here, Webstar said, "Hi Nhyira, can you take us through retained earnings T account and the calculation of the proceeds from share of issue?" I don't understand the context of your question because I think we just did that, so I think you should be able to address that. We did the retained earnings T account, and then dividend had been calculated already, and so we were able to get the bonus issue from the retained earnings account, and that bonus issue reflected in the calculation of the issue of shares. So Webster, I hope that addresses the question that you were asking earlier. Let me know if there are any other questions. Put them in the comment or the chat for me. And also give us a thumbs up on the video. Really helps us a lot to push the video to reach as many students as possible as we continue with our discussion. So let's look at the final issue that we have to address, which is the other operating expenses, and see what we need to do. So workings 10, cash paid, sorry, 4, other operating expenses. So let's see. I'm tempting to do vertical presentation or, horizontal presentation. I don't know. Let's see. Okay. Let me do T accounts. I think that'll be easier. T account is always the OG issue. So on the operating expenses side, I need you to stay with me carefully, because if you check in the statement of financial position under current liabilities, you see accrued expenses there. So we're going to bring the opening figure, balance brought forward. How much we got? 50,000 there. Then we're going to pretend to close the account. Then we bring the current year figure, and that's 40,000. There we go. Now stay with me carefully here, because there are a lot of things that are supposed to come here. We go and there is distribution cost and admin expense. Those are expenses, and so we will account for them and bring them up in our workflow. So we bring in the admin expense and then the distribution expense. Those are the ones charged in the P&L account. Then, if you remember, we were told earlier about some things in respect of what is happening here. Number one was the profit from the disposal that we worked for. Give me a sec, let me see. Profit from the disposal. That's a non-cash item there, but it was added because if you remember, we were told that this is included in distributing expense. So let me do something as well. Distribution. No, where? Yeah, distribution expense. So distribution expenses. So as per financial statement, that is 40,000. Just doing the adjustment one after the other because this is the first question that we are looking at. So let's adjust the profit from the disposal. That's a non-cash item, so we're going to less that. So profit from disposal. Give me a moment. What did we get? We got a profit from disposal. Okay. So if they said it was charged to this, then profit reduced the expenses. So we have to add it back. Very important. Profit reduced the expenses. So we need to add it back to the original. So workings to 15,000. Yep. So you have to know what was done because it was profit and they say charge against distribution cost. So it reduced the distribution cost, so we have to add it back. What else? There was another thing we sold that they said was adjusted for somewhere. The investment. Where was it adjusted for? Let's see. Investment was adjusted for in admin expenses. Okay. So let's go here for admin as well. As per the financial statement, admin expenses was 90,000. Okay. Now, what did we get on the investment side? That was also profit. It means it reduces our admin expense, so we're going to add it back. So profit from disposal, 7,005. Going to add that back as well so that we can get our original issues coming up. So, because these are non-cash items, so we can get original issues coming up. And so if you check, it means that now we will have this to be 45,000 and we'll have this to be 97,500. And so the total discharge, but remember, we are left with depreciation. We were not told where the depreciation was charged. So we'll deal with that as well. Depreciation of 40,000. That must be taken from these two figures. So let me go to the next slide. So total operating expense, distribution. How much was it? 45,000. Okay. Admin. How much was it? 97,500. So what do we have? Then we can less the depreciation from it. 142,500. We less depreciation because depreciation is a non-cash item. Again, you are in the cash flow statement, so remember the basis of the adjustment we are making. Remember the basis of the adjustment we are making. So we less depreciation for the year because it was included in arriving at this total. And the depreciation is 10,000 plus 30,000, which is 40,000. So in total, we'll have 102,500 for us there. 102,500. So that is the operating expenses on cash basis charge for the year. Now, if I come back to my accounts here that we prepared, we are going to be bringing in that charge for the year, 102,500. So 102,500 plus 50,000 will be 152,500, 152,500, so that the balancing figure will be the operating expenses paid for the year. So operating expenses. What do I have? Let's see. 152,500 minus 40,000. Give me a sec. Did I miss anything? Let's see. 50, 40. Okay. And then, am I sure on the arithmetics here? Let's see if I get my arithmetics right. 45, no, 40, 15. This is 55, Nhyira. This one, 55. Okay. So let me change this, 55. So 55,000 plus 97,500. That's 152. So that it will become 112. So that is what we will bring here, 112. So it become 162, 162. So that my balancing figure, 162,500 minus 40,000 will become 122,500. This is the operating expenses paid for the year working stand, 122,500, and that is what comes under the operating activities. 122,500. All right. So we then get the arithmetics. 460,000 inflows minus 346,000 outflows minus 122,500 outflow, and that is 26,000. Sorry, 500. For us here, got to make sure I'm sure on the arithmetics. 460,000 minus 346,000 minus 122,500. Hey, sorry, 8,005. So 8,005 negative, and that will be cash flow from operation. But you're not done, right? Because you need to bring your interest paid and tax paid. Interest paid. If we check in the statement of financial position, there is nothing like accrued interest. So since there is nothing like accrued interest there, it simply means that if we go to the P&L account, the interest finance cost incurred was the same as the one that was paid. So that 5,000 will just come as an outflow. Then tax paid. That we have to work for every time. So that will be the last workings, probably. Workings 11. Quite a lot of work we are doing here. So income tax. Again, just go with a T account and let's get ourselves excited here. So let's see what's happening in the tax. In the tax, we don't have anything under non-current for tax. It's just under the current. So let's see. Are we having the lines well? Yep. So we bring the opening balance. So balance brought forward there. Income tax. Gotta be careful. The second one, 12,000 and 70,000. So 12,000 for opening. Pretend to close. 70,000 for closing. Then we go to P&L account. Income tax charge for the year was 70,000. That will go to the credit side. 70,000. Here we are not preparing OCI because remember the tax that is coming or charge for the year that is coming is both P&L and OCI. Right? But there is no OCI here, so no worries. And so technically it means that it cancels itself out. So 82,000, 82,000. So it means the tax paid will be 12,000. Sounds good? Very sweet, simple, straight to the point. So tax paid, 12,000. And that is how we get the net cash flow from operating activities under the direct method. So net cash flow from operating activities. And it happens to be a negative. So minus 5,000, minus 12,000, and that is 25,500. That's it. We are done. So this is the direct method for the preparation of the cash flow statement. Very easy. Very easy. Now, you realize that, as I told you, I was working with leaving reasonable space, right? But I realized that I started doing the cash flow from investing on the next page. In the exam, or if you face that, no problem. Can just continue with your work. You don't have to cancel and bring anything back. So let's see if we can finish up with the investing activities. Are we done with the investing activities? Have we touched on everything? Property has been talked about. Investment has been talked about. Yeah. The dividend they received, we've brought it. The proceeds from the 2 disposals they did, we've brought them. Yeah. So I think that will be all. So we can have net cash flow from investing activities. So you see that the real work is under the operating activities, whether we are under the direct method or the indirect method. 55,000, 20,000, 153,500, 42,500, and then 320,000, and that's 134,000, also negative. And so this is where corporate reporting students, you're going to be analyzing the cash flow statement, right? Because investing activity is also negative. Why is that? What's the implication of that on the entity? Operating activity is negative. Why is that? What's the operation on the entity? So analysis, pretty important there. Then we finish it up with cash flow from financing activities. And we have the items here already. Proceeds from the issue of shares. So proceeds from issue of shares. If you remember, we worked this out, so we're going to go pick it up. No, it's here. Proceeds from issue of shares, 80,000 from Workings 5. Workings 5, 80,000. Then, if you remember, we paid the dividend, which we worked for. So dividend paid, let's see, from workings 3, 5,500, that's an outflow. Is that all? Then the loan note went up in value. The 10% redeemable loan note, it went up. So there's issue of loan note of 40,000. So issue of 10% loan note. So 50,000 minus 10,000, that's 40,000 inflow. There was no leases here, so we are in a comfortable lead to proceed with the discussion in respect of that. And so, what do we have? I think that is all. Let's see. 80,000 minus 5,500 plus 40,000. And the financing activity is positive of 114,500. So that's net cash flow from financing activities. Now we can add the 3 up to see what we have. So operating activities, negative 25,500. Investing activities, negative 134,000. Financing activities, positive 114,500. And that's giving us negative 45,000. So we'll call that net decrease in cash and cash equivalent, which is 45,000 negative. Then we are going to bring in the cash and cash equivalent brought forward. Then we can get cash and cash equivalent brought down. So let's see. The opening cash and cash equivalent. Now, if you pay attention closely, there is bank under current asset, there is bank overdraft under current liabilities. So you got to be careful. So it means that the opening figure will be 40,000 minus 5,000. Which will be 35,000. Okay? So that the net figure will be 10,000 negative. Is that what we have at the current? Yes. Bank overdraft is 25,000. That's negative. Bank deposit is positive 15,000. So we owe the bank 10,000. Yeah. That is our cash flow statement, and it has balanced. So this is May 2024 financial reporting ICAN instead of Chartered Accountant Nigeria of Nigeria financial reporting skill level paper, direct method for preparation of the cash flow statement. That's the idea there. So that's what we need to understand. Slide 1 there for that. Slide 2, which is the conclusion of the financial statement. Then workings 1. A lot of workings to be done here. Workings 2. Very important, getting our bonus issue from the retained earnings. Workings 3. Getting the money we receive from our customers. Next slide. Getting our cash paid to suppliers. Next slide. the operating expenses workflow that we did. And the final slide, the income tax and the rest of the operating expenses. So these are the things that you must understand when it comes to the preparation of the cash flow statement. Another styling, another perspective on how these are supposed to be presented. So yes, the indirect method, you must know about it, but you must also know about the direct method. And it is just taking you back to accounting 101 to be able to know how the various treatments are supposed to be done generally at the end of the day. So that is it about that. Thanks for watching. I'll be catching you same time on Wednesday as we continue with the discussion. Stay safe and take care of yourself. Remember, you can enroll in the full course on our website, okay? So if you want more videos like this that you can get access to, the questions, the solution, and get a mentorship session with me, as well as join our Executive Leadership Masterclass, you can enroll in the practice question courses on our website and get access to these content so you can open yourself up, put you in the position to go into the exam or and pass the examination. I'll see you same time on Wednesday as we continue with our discussion. Bye-bye.